If you've been looking for investment properties under 600,000, you probably noticed the same problem I have. Everyone's either recommending suburbs that have already had their run, or suggesting places so remote you need a helicopter to collect the rent. I'm Gilbert, the founder of SuburbsFinder, a data analysis tool used by thousands of investors across Australia. And I just analyzed over 7,800 data points to identify 4 specific suburbs that are delivering 5% yields and above while showing early signs of capital growth. So, in the next few minutes, I'm going to show you exactly which 4 suburbs made the cut, the specific data that proves they're undervalued, and most importantly, the systematic approach I use to find them so you can replicate this analysis for any budget or location you're considering. Before I show you the 4 suburbs, let me quickly explain how I found them. I use 5 specific data points when I'm analyzing any suburb under 600. First, rental yield above 5%. In this interest rate environment, anything below 5% means you're subsidizing the property. Second, vacancy rate below 2%. This tells you if tenants are actually competing for properties in the area. Third, recent price momentum. I'm looking for suburbs showing positive growth over both 3 months and 12 months period. Not explosive growth, just consistent upward movement. Fourth, supply constraints. Areas where new development is limited, either by location or planning restrictions. And fifth, infrastructure investment on transport, employment hubs, or government spending that will drive future demand. When I ran this analysis across Australia's more affordable suburbs, 4 locations stood out immediately. The first being Collie in Western Australia, where the median price is $455,000. Now, I know what you're thinking. Gilbert, that's a mining town. Isn't that risky? And normally, I agree with you. But what's happening in Collie is interesting. Yes, it's benefiting from WA's mining boom. But unlike other mining towns, Collie is diversifying. They're investing heavily in renewable energy projects, and the town is becoming a hub for workers who can't afford perch prices but still want decent amenities. The median price sits at $455,000, so well within our budget. And what stood out the most for me about Collie was the rental yield, which is sitting at 6.29%. In today's market, finding anything above 6% is rare. Properties are renting for $550 a week, and with a vacancy rate of just 0.68%, tenants are clearly competing for rentals. The price growth backs this up, 26.39% over the past year. Now, that might sound unsustainable, but when you're starting from $455,000 as a base in a state where the median is over $600,000, there's room to move. And the quarterly growth of 8.33% suggests that this momentum is continuing. Moving to Queensland, Emerald caught my eye for similar reasons, which is why it made the list, but has a slightly different story. Emerald sits in the heart of Queensland's coal region, and it's becoming the service center for the entire Bowen Basin. So instead of just another mining town, it's where the mining companies are basing their operations, their families, their support services. The median price is $470,000. So again, comfortably under $600,000 threshold. Properties are getting $550 a week. Same as Collie, but the vacancy rate is slightly higher at 1.07%. Still tight, but not as extreme. What I like is the rent growth, 5.77% over the past year. That tells me demand is building, not just holding steady. And the annual price growth of 23.68% reflects this transition. It's not just mining wages driving prices anymore. It's genuine economic diversification creating sustainable demand. Now, for those who want to stay closer to Melbourne, since that's where all the buzz is right now, Tatura was the standout and sits at number 3 on my list. It's about 90 minutes north of Melbourne in the Goulburn Valley, and the median price hits exactly 500,000. Tatura is an agricultural town, but it's caught in this interesting sweet spot, close enough to Melbourne for people who work remotely or only need to commute occasionally, but far enough out that housing is still affordable. The rental yield of 5.62% reflects this, not as high as the mining towns, but solid for Victoria. What's driving the rental market here is what I recall affordability migration. Families getting priced out of Melbourne's outer suburbs are looking at places like Tatura. They can get a proper house with a yard for what a unit costs in Pakenham. The vacancy rate of 1.49% shows this demand is real. The price growth tells the story. 12.99 annually and 6.72 over the past quarter. That's Melbourne level growth at regional prices, which usually doesn't last long once people catch on. And the last suburb on my list, Narrabri in New South Wales, is what I'd call the steady Eddie of the group. It has a median price of 465,000, a rental yield of 6.15%, but the growth story is more measured. It has an annual price growth of 9.41%, which is not explosive like the others, but consistent. What I like about Narrabri is the rental fundamentals. Vacancy rate of 1.01% and the rent growth of 10% over the past year. That tells me the rental market is tightening faster than prices are rising, which usually means price growth will follow. There's also a practical element here. It's in New South Wales, where most lenders are comfortable, and it's got that agricultural base that provides economic stability. It's not going to make you rich overnight, but it's the kind of investment that lets you sleep well at night while still delivering solid returns. So those are the 4 most affordable suburbs that stand out to me right now. They each tell a slightly different story, but all the same fundamental pattern. Strong yields, tight vacancy rates, and early signs of price momentum. The question is, which one fits your investment strategy and risk tolerance? Collie and Emerald are perfect if you're yield focused and comfortable with regional investing. That 6% yield means positive cash flow from day one, even with today's interest rates. But you need to be okay with the fact that these are smaller markets. When you want to sell, it might take longer to find a buyer. Tatura works if you want the best of both worlds. Decent yield at 5.62, but still within the driving distance of Melbourne. It's ideal for investors who like to physically inspect their properties or want the option to convert to owner-occupied down the track. Narrabri is your conservative play. At 6.15 yield is strong, but the real appeal is stability. NSW lending is straightforward. The agricultural base provides economic diversity, and that steady 5.68 growth suggests sustainable appreciation rather than a speculative bubble. If you are going to invest in either of these suburbs, you also have to consider the risks. Remember, these aren't blue-chip suburbs. They're regional markets with small populations and fewer economic drivers. The upside is higher yields and growth potential. The downside is less liquidity and higher vacancy risk if local economy turns. So, these are the things you need to weigh up. If you decide that one or more of these suburbs fit within your risk tolerance, timing is another factor you need to consider. Collie and Emerald are already showing quarterly price growth of 7 to 9%. If this momentum continues, entry prices could push beyond 600,000 within 12 to 18 months. Tatura and Narrabri are earlier in the cycle, but the rental fundamentals suggest they're not far behind. So don't rush your decision. But just remember that when good properties come up in tight markets, they move quickly. Now, you have the exact framework I use to identify these opportunities, plus 4 specific suburbs that the data says are positioned for both yields and growth potential. But here's the reality. By the time I make a video about these suburbs, some of you are probably wondering this. What other opportunities are out there that Gilbert hasn't covered yet? And that's exactly the right question to ask. That's why I built SuburbsFinder. It's the same analysis system I've just walked you through. It covers all 15,000 plus suburbs across Australia, updated monthly with fresh data. You can filter by your exact criteria, budget, yield requirements, and growth potential to spot opportunities before they hit everyone else's radar. Instead of waiting for someone like me to analyze suburb one by one, you can run this analysis yourself on any location you're considering. Compare multiple suburbs side by side, track changes over time, and most importantly, identify the next wave of opportunities while they're still affordable. I've set up a free trial that gives you full access to the platform. You can access it through the link in the description below. It'll let you dive deeper into the suburbs I've covered today. Plus, discover others that might be an even better fit for your specific strategy and budget. The data is out there. The opportunities exist. You just need the right tools to find them before everyone else does.